The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 728. NASDAQ is up 157. S&P's up 76. Gold contract down $3.80, trading at $16.90 an ounce. You get silver up 37 cents, $15.55 an ounce. Light sweet crude up 43 cents. $26.51 a barrel, notes and bonds. You get the 10-year down 22 ticks, trading 137.22. The 30-year off 2 points at 178.20. Now, this is the first day, folks, that we get some volume on the way down. We'll see where we get some follow-through. My take is that this note and bond market does want to go to the lower end of this consolidation, which we had hit last week. And if we take a look at the 10-year, what you're going to see out here in the 10-year, right now you're trading out at that 137.22. We're talking about a 133.21. King dollar failed to basically get that test done yesterday, down to 876, trading 99.810. The euro is at 109, the yen is at 109.03, and the British pound is at 123 to 1 US dollar. Tom O'Brien, what's going on?
Good Tuesday morning. Just watching these markets rocking and rolling to the positive side, man.
Rocking and rolling. And, folks, we got an ABC market on the way up. We had the NDX 100 rip apart the B point yesterday with volume. If you take a look at this, you get Amazon and a monster ABC up. That would actually break all-time highs. You got Google and one. Microsoft just missed one. So, bottom line, hold on for the ride. And
that's for sure.
Yeah, it's wild, man. There's no doubt. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim, as we do every Tuesday, Wednesday, and Thursday. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time, outstanding show. You want to understand the option market, option strategies, futures. Great program. If you haven't test-driven yet the Thinkorswim platform, you're sitting right there on the site. Hit the banner, bring it up to allow you to trade paper money with Kevin and his team each and every trading day. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. Welcome to the mother of all relief rallies.
There's no doubt, man.
This is pretty incredible. But not really, if you think about it, not really shocking, right?
Yeah.
Because uncertainty, I don't know if it's turning to certainty, but it's certainly turning to less uncertain. As, you know, Tommy, you and I talked about it in this interview a few weeks ago, how the market goes to the worst-case scenario.
Yeah.
And it was late March where everyone was talking about the worst-case scenario, and now the real numbers are coming out. And as usual with something like this, it's nowhere near the worst-case scenario. And that's what you're seeing this market react to right now.
And, you know, Kevin, what's amazing is that, you know, folks, yesterday, so picture, at the last hour, the market was trying to bust through where it failed last week. And when that busted through, we went up another 35 S&P points, man, coming into the close. That was like wild, Kevin, watching that whole thing shake out. And, of course, whoever didn't close, you know, their short position on the close last night, folks, okay, you know, bottom line is in trouble right now. And, you know, I can understand. It was a great place to short, but the bottom line, once it broke through it, it's like, man, you better get out of there, man, because, you know, this is about as wild as you can get. There's no doubt about it, man.
Yeah, these moves are, you know, are just massive in terms of percentages. I mean, even today, the VIX dares go down 29 cents here, and, you know, you look at the SPX, and you look at at the numbers on it, and it's up another 2.25%. And the E-minis are up more in terms of percentages. So you got to be leery of these percentage moves. VIX isn't coming in anytime soon with the way these percentage moves are going. Now, it'll drip, but think about it. At 48, it's a 3% move.
Okay.
Yesterday was almost double that in some of the indices. So the VIX isn't going back into the 20s anytime soon.
Yeah, no, And you know what's intriguing? Remember, even like 2 or 3 weeks ago, the market's been volatile for sure, but the VIX was even actually lower than the moves that we had in the marketplace.
Yeah.
So you can see now that it basically won't move around that much. The bottom line is that we both know. This, no matter how long you've been in the marketplace, folks, okay, this is a move, for the record books. There's no two ways about it, man. It's like...
Yeah, I mean, only 1987 really feels like this did. And 1989 was pretty intense. And 2008 was intense, but much slower and over time, although it ended up being bigger numbers. But this feels most like 1987, and unfortunately or fortunately, I have experience in all of those. So,
which is pretty cool.
It feels a lot like 87.
Yeah.
It really does.
That's pretty cool, because what does happen is that, we've said this before, you can't teach these things. When you cycle through them, it's pretty cool, because then you get everything. You get the number, you get the feeling, you get the head game, you get it all, folks. Okay, and
there's no grad school class on trading these markets. No. That's for sure.
No, there certainly isn't. And Kevin, when I was starting off, I was talking about this, the NDX 100, man. This NDX 100 is strong like a bull, man. I mean, if you pull up Amazon, so check this out, folks, okay? I was just looking at this morning. This is about as intense as you get. Amazon, okay, has gone from $1,626 to $2,000. And my take on it is that we blew by this swing point yesterday. And that's saying, man, Amazon's going to take out its all-time high. We'll see what happens. But that in itself is like, you got to be kidding me, man. I mean, this buyer's hand over fist.
Tom, I'll tell you my theory on Amazon, Google, Facebook, okay? I put those three together in some ways. But Facebook came out a couple weeks ago talking about lower ad revenues, right? Not really surprising based on where we find ourselves.
Sure.
But overall usage of Facebook, overall usage of Google, overall usage of Amazon, skyrocketing.
Oh, yeah.
Right? So I think these markets are moving towards who they perceive the winners and losers to be in this economy. And I think, obviously, sure, the ad revenue's down, but it's going to come back. And guess where it's going? Where you can show that most of the American public and the world has gone to, which is Facebook, Google, Amazon, ordering their goods online, communicating via Facebook, clicking on everything having to do with Google. So all those, though they may have a short-term revenue problem like a lot of companies, these are the ones that are going to fire back and be even stronger coming out of this.
Yeah, there's no doubt. And what does that, what you're hearing off Kevin, folks, okay, which is pretty cool, what happens in all these downdrafts is that the strong not only survive, the strong get stronger. I mean, that's just how it goes, man. I mean, every downdraft in the marketplace, that's how it works, I mean, that's when you find out, who has a bathing suit on or not when the tide's going out, right?
I mean, think about it. Even if you didn't have these names in your portfolio, you're moving to them now as you upgrade the quality of your portfolio.
No doubt. Listen, folks, 45 minutes from now, outstanding program. Kevin, you have a great one, safe one. We look forward to the program.
Have a great day, guys. Thanks for having me on.
Thanks, Kevin.
Stay right there, folks. Tommy and I are coming right back. Dow's up 545, Nasdaq's up 101, S&Ps are up 59. We'll come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tigers Den. For a limited time, you can get a 30-day free trial to the Tigers Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tigers Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tigers Den. The Tigers Den is an interactive chat room that runs all day where other Tigers and Tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tigers Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tigers Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 507, the Nasdaq's up 97, S&Ps are up 59, and we get a market, Tom. No doubt.
Sure do, man. We were chatting with Kevin Hinks, and the time we were on the air with him, the S&Ps dropped about 30 to 40 S&P points, let alone since the market opened, man. 2750, nice round number, all the way down to 2693, 57 S&P points. That's 2%. The market just traded down from the open, and we're still up, 2.2%, but fast moves, man.
Fast moves. If we go over to the NQ, you better keep this in mind, folks, okay? This is the perfect market. See, when you get a downdraft like this right at the get-go, this is the perfect market, my take, that we're going to go much higher. This market's going to hold, but this gets the bears going, which is perfect, okay? And that's exactly what you need. This NDX 100, folks, is in an ABC structure on the way up, and that is the thing you want to keep your head wrapped around. And watch this Amazon. I'll bring up Amazon right now. We were talking about Amazon.
Yes.
The Qs are in an ABC up. They took out the B point yesterday with volume. Look at Amazon. Amazon yesterday, 5.7 million shares versus 5.1. This is an ABC up that's going to blow away its all-time high. So,
and you know what's remarkable? I was just doing the numbers, playing with some calculators, man. I mean, even so let's just do what the high was today on Amazon. Let's see what it is. 2035, right? So you go from 2035. I'm just putting in kind of 2035 minus. We're at 1626. So Amazon's up $409 from that low. That is a 25.15% pop from that low. But here's the remarkable thing, man. That looks amazing, right? The S&Ps from their low of 2174 up to 2704, 26.5%. Excuse me, to 2750, the high today. So you have 2750, right, minus 2174, 576 S&P points that we made it, and that's 26.5%, man, just from March 23rd to April 7th.
Yeah, it's a monster. Now, check this out, folks. This is going to be pretty cool. So this is the first day that we actually have volume on the way down in bonds. So we'll see if we get a follow-through. Let me show you something here, though. I'm going to put together a technical plus a fundamental on this baby. So watch this. We got you're down 23 ticks. Now, if we look at this 10-year, what you're going to see is this. Let me get this in here because this is pretty cool, man. So the first time, well, first off, if we go back to the 9th of March, what had happened, folks, is this, is that the ABC structure on the way up, everything got fulfilled in a huge way. You came off those highs, and you came off the highs with light volume. Okay, so we go from a price point of 140.24 down to the 133. Then we go up on light volume. So when you do that, bottom line, that's really saying it's a consolidation because we did go up with lighter volume. Now today's the first day we get volume on the way down. So that's saying, okay, your probability is pretty good that, you know, we're going to go to the bottom of the consolidation. Now watch this. This is a trip, folks, okay? Credit Suisse. I'm going to pull
I saw you send me that article right before.
So this is so cool, Tom, right? So picture this. Credit Suisse went to his own ultra-high net worth clients, okay, and they offered them a structured product. Now, a structured product means that if you and I were in the broker-dealer community, folks, you can get creative. You make a product, you put it out, you get it, you know, okayed. And what they did is this. They went out to their institutional clients, their family offices, and the billionaires that they have, and they decided they're going to pay them 2% interest for 1 year, okay? Now, let me show you something, because this is telling me that bonds very well may be done, but they're going a lot lower. Because if we go over and we take a look, so picture this. Prior to this, okay, let's go to Switzerland. Switzerland is still at a 0.32 negative yield on a 10-year, okay? Switzerland was charging people to basically put money in the bank. So they went from charging people, they probably still are charging people, but they have a different program now at this 2%, saying I'm going to pay you 2% for 1 year. When I put that together, Tom, and say, okay, hold it, man. If money's costing zero, why are you paying 2%, right? Well, I know why they're paying it, because they want more money, because they figure people are going to want more money, and they'll pay more money for it. That's telling me, folks, that rates are going up, because Switzerland was the first country in the world that went negative. We're not talking years ago now. And now the bottom line is that the biggest bank in Switzerland, bottom line is, you know, saying that, hey, guess what? We're going to pay up for money now. So it's going to be wild watching this whole thing shake out, man.
Yeah. Yeah.
NDX 100. Now, check this out inside the NDX, too. Inside the NDX today, what you do have is you have the laggards that are the runners out here, which is a little, you know, concerning, no doubt about that. You get American up 15.5%, United up 9.5%, Marriott's up 9%. So those three, you know, those are the kind of the worst performance stocks in the indice in general. So it doesn't mean that we're not, you know, still going to go higher. But when you do see that, it's a heads up in general. You know what I mean?
Hey, I'm going to jump over to an article, all right? I talked about it in our program, just talking about the impact. The Times had a cool article up here. I'm not sure if you caught it in my program, just with some statistics of how our lives are kind of changing. One cool thing I found about it, so the first graphic up here has Facebook. Now, this is website usage, not apps.
Yeah.
And it speaks to the fact that it makes sense, right? If you're at home, you're not sitting on a subway using your phone. You're sitting on maybe your computer.
Right.
Facebook.com, the website, up 27%. Netflix.com, up 16. YouTube.com, up 15. Versus their app usage, basically flat to down 5% for YouTube. Would you imagine that YouTube's app would be down 5%? Well, if their website's up 15, they have some growth in there, but it would make sense. A little bit of a resurgence of desktop away from mobile as people are spending more time at home. And then they just have a bunch of stuff in here in terms of the apps people are using to connect through video chat. Google in there, plus 12%. Nextdoor.com, plus 73. I haven't heard of these, Nextdoor.com or House Party, plus 79. And then the likes of the apps that we've become familiar in terms of Zoom, really accelerating. This is daily app sessions from about 2 million to 7. What I found interesting, Google with 2 products here. Google has their own classroom app, specifically designed, going from like 2 million up to 5. Microsoft Teams, I know you were talking to Dave White one day about these types of trends, Microsoft Teams accelerating, but then you have Google Hangouts as well, going from a pretty marginal number up to almost 2 million. It'll really be interesting. The one thing I found most interesting of all is that, of course, people are using desktop more. I wonder how that plays in. I wonder how certain websites or apps that can capitalize on desktop usage might really be able to benefit benefit. One of them, Zoom, of course, but check out that pop on Facebook as we were talking about those stocks, man. Facebook getting a huge bump on desktop, and it's down from 224 to 170.
Yeah. So the Nextdoor app, Tom?
Yes.
Folks, the Nextdoor app will drive you right out of your mind. There's some. So what the Nextdoor app is that they have neighborhoods, right? So in your neighborhood, if you pull it up, it's going to be, about all your whole neighborhood. And when I say drive you out of your mind, I mean, there's some good stuff on there, but you always got a couple cranky neighbors, and what ends up happening, I mean, sometimes they're on there all day long. I've been on there a couple times. It's like, oh my God, this is like, No,
that's like anything in life, right? You pull up Amazon reviews. There's somebody in there saying this product stinks because they sent me the wrong product. Right?
I know, I love it. Look what Duffy said. Nextdoor app is Paranoia City. It is. It's so weird, man.
I bet.
Dow up 474, Nasdaq up 86, S&P's up 55. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tom and Tommy O'Brien, we do appreciate you growling and prowling with us out here. We have the Dow up 454, Nasdaq up 82, S&P's up 55. And, that gold contract, Tom, I was listening to your program. Quite a move, huh?
Oh, man, right? I mean, it's remarkable. It is. And now what are we at, $16.95 right now? But, yeah, I mean, just $100, man, we got yesterday, basically.
And if you take a look at this, folks, the bottom line is that, this is... This is the sickest part, folks. This is how gold likes to trade, which is really sick, okay? But the bottom line, it is what it is. Gold, basically, not basically, but gold did take out a B point yesterday of an ABC structure up, ripped it apart with volume. We did 193,000 contracts versus 107. That is saying that the bottom line is that we get an ABC structure up to 1804. Monster number. So, and now we get volume behind this move here, which is also saying that, guess what? We are going to go right back topside. So we'll see where this whole thing is going to shake out, but it's a monster. And on the delivery aspect, so now this gets really interesting, folks, okay? Here, let me pull this up again because I want to show you something here. So what we had, the move that was made on the 24th from 1566 to 1693, what happened there was that was basically when the CME didn't have enough gold in the warehouse to deliver what the aspect of how many deliveries could actually be had inside of the futures market, okay? So now what has happened is this, and this is you better always really understand this, folks, the way this works, is that the CME changed their rules. So before what ended up happening, Tom, is that you had to have a 100-ounce bar, okay, and it was specifically certain ways it had to be stamped and the whole certified and the whole bit. Well, bottom line, they changed that now you can deliver a 400-ounce bar. So now they have more gold than they know what to do with, okay?
Okay.
And, my take on it, it's not going to matter, okay? Because the bottom line, it's an ABC structure up, and,
Sure.
It is what it is. But it's really cool because if you understand that, folks, okay, that what you're seeing out here today is that you're seeing that if we were in the physical gold market, there's still a disconnect between the London gold price, our gold price. So there's these variations about delivering gold that you can make a fortune on, that big players are making a fortune on. And the delivery aspect. Isn't that wild?
Yeah, it is, man. And in those commodity markets, that stuff matters, man. More than, that doesn't really come into things when you're talking about a share of an equity. Maybe it does come in if you're playing some kind of option game, right? And you need delivery of an option or something like that, but not like, when you're trading futures, those futures are determined by physical delivery of a physical commodity, man, and we see it happen occasionally.
And that's if you're growing up again, folks, okay, you either want to be a banker or I'd love to be a physical commodity guy, because what happens, they rule. That, what I mean? Because it's like, okay, you want to trade the future, but the reality is, what are you paying for it right now? Just like in that oil market, okay? The bottom line, say it's $26. I bet they're still paying $18, $20, $15, who knows? Do you know what I mean? Wild. Let's go to Charlie in Framingham. Charlie, what's going on, brother?
How you guys doing?
We're doing good,
Charlie,
man. How you
good
doing?
morning, man?
I'm driving in my car.
That's a beautiful thing.
Yeah, I'll just tell you a couple of things. One, I'm always looking to save every penny, and a lot of people are. But this might be helpful for people that are unemployed and maybe not sure what's going on. I have T-Mobile and as my carrier for my cell phone, and they have something called T-Mobile Tuesdays, which is an app. Are you familiar with that at all?
I'm not, Charlie.
No.
Okay. Well, it gives you 10 cents off when you go to when I go to Shell. That's where I get my gas. You get 10 cents off automatically.
Okay.
Now, T-Mobile has that relationship with Stop and Shop. No, with Shell, and then there's a thing called fuel cards. And you get 10 cents off every time you do a fill-up, like maybe once a week or whatever.
Okay.
So you get 20 cents off automatically if you've got T-Mobile and you've got that app.
And that's
and
another
then if you Stop and Shop, you get another 10 cents off for every $100 you spend. So I just paid I think $1.78 for gas.
I love it, man. That's important. Yeah. That's awesome, man.
Hey,
totally.
Percentage-wise, that stuff is huge.
And you know what I've always thought, Charlie and Tom? If you can always think in percentages, right? And really, if you're always picture that, your age, Tommy, or you're 16 or whatever, you know what I mean, and you save that 10% on a continual basis, can you imagine how much money you actually save? it's a monster number, man. I mean, it's just a monster number.
Yeah.
No, it is.
Yeah,
We have BOGO, right? We have buy one, get one at Publix.
It's pretty neat.
Down here, and I feel like I just became a millionaire when I get buy one, get one on $8 olive oil because it's real money, man.
I know. I love it.
Well, I'm glad that an Irish kid is taking and eating olive oil.
Oh, you kidding me? Hey, listen, the O'Briens, even though we're 100% Irish from Connemara, I think the Italians got in us somehow, man, because we love Italian food.
They certainly got in our household when it comes to the kitchen and the refrigerator and the cupboards occasionally.
There's no doubt, man.
We love our good steaks and meat too, but man, Italian olive oil, sign me up, man, for sure.
And if you don't like Italian food, folks, there's something wrong with you anyway. So seriously, man.
Well, another comment. I still haven't gotten my 10 grand.
Yeah, no, listen, folks, no one's got the 10 grand yet. As soon as someone gets it, man, I'll let you know. We're keeping track of it, but the bottom line, we're supposed to be 72 hours, but we know how this goes. It's not there yet, but as soon as it's there, we'll, and, in that aspect, so you want to, listen to this, man. I can't wait to get rid of Wells Fargo. We should have done it. I should have done the frickin' thing. So Wells Fargo sends me an email this morning, right? So we're in line, for the paycheck protection and all this stuff, right? So Bank of America is the only one that is really up to par. And if you get a business, that's where you probably should be. So Wells Fargo, Tommy, sends me an email this morning and says, we're not ready yet to take applications, but you might want to go somewhere else because they might be out of money before we get to you. Why do I send you an email? I mean, it's unbelievable, man. And, and anyway, it is what it is.
That's really unfortunate, to say the least. Yeah.
That's a joke.
Well, we'll chat about it afterwards, and maybe we will. Exactly.
Yeah. So, Charlie, SPXL, right?
SPXL.
Do you own it?
I got it yesterday at 28.
Okay.
I don't know. I'm out of the house. I saw it was up to 31.
Yeah, you're at 29.60 right now. I mean, my take on this is that, you might be able to get, so if we go to the S&P, what we had with the SPY yesterday is this, folks. You had the Qs do an ABC structure on the way up. The SPY was shot on volume. What we did with yesterday, we did 186 million shares, and we needed 194. But that's not bad, man. I mean, so, that is saying that, 263 if we get it, 218. Here, stay right there, Charlie. We'll just do the numbers for you.
Okay, thanks.
Our phone number is 877-927-6648 Dow. Dow Industrial's up 511, NASDAQ up 89, S&P's up 58. We'll come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. Educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. My Dow up 510, Nasdaq up 85, S&P's up 60. We got our man Charlie from Framingham. We're talking about the S&P. So, Charlie, the SPY, right? The SPY just missed the volume. But if we have volume that even comes in today, which we very well could, meaning, you need volume like more than 194. We're at 57 million. That'd be an ABC structure up to 290 inside the S&P or near 270. So if that's what you get, you're going to be trading into the March 6th level, which, if we go to the SPXL, and the SPXL, folks, is 3 times the bull. That'd get you, bottom line is that it's a monster, man. It's like $45, Charlie.
Okay. All right.
So
I'll probably sell it before then.
No, for sure. I mean, these are daily investment vehicles, folks. The bottom line, I'm just kind of giving you a longer term view on it. You know what I'm saying? So,
right.
You get action
that's
now.
Great.
Cooking, brother.
Take care. You guys be good.
Thank you.
Bye-bye.
Thanks for calling, Charlie. Let's go to our man Carlos in Mission, Texas. Carlos, what's happening?
Hey, how you doing, Tom? How you doing, Tommy?
We're doing
Morning,
great.
Carlos.
Yourself?
Oh, I'm doing well, thank you. Very well, thank you.
Good.
Great to hear from you, man.
I'm glad you guys are talking about banks, because I have a situation, Tom. I don't know if it's happening to somebody else, but I got a letter from Bank of America yesterday.
Yeah.
I actually called them. After 30 years of having a checking account with them, and they just sent me a letter saying that they were going to close my account, that I need to withdraw my money. I called them, and they said that they have the right to just close the account. And I said, did I do anything wrong? Because I paid them a car, 2 mortgages, some other properties I had in the past, and my 30 years of history with them. And they said, just when you sign the agreement of opening a bank account, we have the right to, you concede the right to close the account anytime. We can close the account anytime we want. And I don't know if it's because of the current situation or something that I don't know what it is. But they said they don't have to give me any explanation.
That's wild, man. That's heavy. So just to reiterate, folks, what Carlos is saying, he's had the account for 30 years. They just send him a letter saying they're closing the account. They have that right. That's the bottom line. The scariest thing about banks in general, is that you can have credit lines with them, they cut them off immediately, okay? So you better, that's a heavy deal. Now, I'm wondering, Carlos, is that, and this is where this whole prejudice thing can come in a huge way, have you done currency transactions in that account?
No, Tom. I usually make transfers from that account to my broker account, either in and out. And I actually had put more money in my broker account lately than I never done before, because the drop that we had, I was expecting that bounce will come in.
Nice.
So I put good money on my broker account.
Okay.
So that's the only thing that I make some transactions more than often this time, but it was to put money in my broker account,
Right.
but I put cash on my bank account.
Unreal.
So crazy. I was surprised, but other than that, I think all those 3 years, they were at the bank that fit my expectations. So I don't know. I'm just surprised. I'm
No,
right
that's
now with
pretty
another
sick,
bank,
man.
because I already had another account. But as the situation is, if I wouldn't have another bank account, it would be very difficult because you can't even walk in a bank right now to open an account.
No, you can't. Everything is by
Right.
appointment, and you can't open it. Yeah, that's pretty sick, man.
Yeah,
That's,
so it tells a lot about the bank in that in a situation where they're supposed to be with the customers,
right.
they're actually putting the customers in a situation because all my direct payments are made to that bank, and I have 21 days to arrange everything. So I just want to comment that, and other than that, thank you for everything you guys are doing. It's been very helpful.
No, that's a shame, man.
Market drive.
Yeah, that's sick. Hey, can I switch gears on you just for a second? The peso.
Yes.
What can we do, man? Can I go come pick you up and get out of Mexico, man, and buy some land or something, man? I mean, what's going on with this peso?
Everything is frozen in Mexico as far as properties and everything. The panic that happened here first didn't happen right away over there, but as soon as they start closing borders and the peso start going very sharply to the downside.
Yeah.
Oh, people got terribly panicked. Right now, small businesses are struggling because the government is forcing small business to pay the salaries of the workers.
Really?
And if you don't pay them, they can sue you, actually.
Wow.
If your business, and that's very difficult because the small business can barely survive with no customers.
Right.
So it's going to be, I don't know what the effect of the next, the disease or the sickness or the virus, it's one thing. But the second part, I don't know how they're going to handle it because the business are barely surviving right now.
Yeah. You can see it. I mean, this morning I'm saying to myself, man, between Mexico and Brazil, I mean, I'm almost close to buying those currencies, man, because it's like blowing my mind, man. Both of those countries, folks. I mean, it's hard to comprehend. If we go over, take a look at the real in Brazil. I mean, this is like crazy, and it is what it is. But like right now, the real is 5.2 reals to $1 and if we go back 3 months ago, it was 4. And of course, in the peso, that really got blown apart. But weird, man.
Yes, it's crazy, Tom, and we believe that eventually everything is going to be okay. And I was just amazed how this panic can bring this market that looks. It actually, I thought, was a strong market, and it seems like it was not really that strong. The way it dropped in 2 weeks.
That's right.
Yeah. So bad. But one thing that I really love from this, Tom, is that there were companies like your business that was ahead of time. Because, see, we didn't lose one single day of TFNN. One single day. And there was always TFNN on live, even making the transmission from home, or everything was smooth.
Well, you guys make it for us. You guys and ladies make it for us. There's no doubt.
For many businesses.
Hey, let me ask you, how are you feeling?
I'm feeling acceptable.
Okay.
Because right now they closed. See, I was taking my treatments on close the border.
Okay.
But they closed the border, and because my treatment is out of the conventional.
Yeah.
See, they need to see proof.
Okay, we got to get you back there. Okay.
All right, Tom. Take care.
Carlos, thank you so much for the call, man.
Take care.
We're sending you the
Thanks,
light.
Carlos.
We're going to get you over that border again. Get that treatment, man.
Yes, thank you so much.
Thanks, Carlos.
Thanks, Carlos.
Thank you.
Stay right there, folks. Tommy and I come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 270, Nasdaq up 18, S&Ps are up 34. They sound like some good numbers, folks, but the bottom line is that you've given up about, actually over half of the move.
I was going to say, did you say 270? What happened to 870, right?
Yeah, there's no doubt,
Seriously.
man. It's a trader's market, folks, big time. Now, as you come over to our website at TFNN, you're going to see right under featured content. Now, what's going to be so cool about this is, you know, we're talking about intraday here. Our man, Mr. Basil Chapman, he's going to be doing a live intraday webinar. It's a 2-part session, folks. It's going to be on April 15th. And if you can run through it, Tom, please.
Yeah, so a week from tomorrow, man. Check that out. 9 a.m. till 4:30. He'll have a lunch in there to break it up, but that's about it. So the whole trading day from a half hour before the opening bell to a half hour after the closing bell, he's going to be talking about the technical tools that give you buy and sell signals, how to use those tools to initiate and keep you in the trade, the techniques discussed and practiced in detail. Right when you sign up, Basil's going to email you an emailed booklet with the key Chapman Wave techniques sent to all the participants to begin preparing for that webinar webinar 8 days from right now. You also gain instant access to the opening call. If you're already not a subscriber, that's $128 value. This is all going to be archived. When you gain access to the opening call, you gain access to Basil's archive webinars in there that you gain access to. So check it out. You gain access to all that stuff immediately. Get ready for the webinar a week from today, and 9 a.m. till 4:30. Man, Basil's excited. He wanted to get it launched immediately, because that way he can go over this market with all the peaks and all the troughs, man. Should be a good one.
And, just as we say intraday, folks, okay, when you ride that chop and wave, you're going to learn quite a bit, because the bottom line is that most times this would take, 6 months, a year to have these types of moves, and you get them in a day. A day.
Not bad, man.
You got to love it.
Yeah.
Stay right there, folks. You got Think or Swim coming up next. And I'm man, Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Look at him, folks.